shelter. Well, we are continuing with this discussion on the debt market and the NBFC and housing finance space. We had the Aviation Minister Jayant Sinha very strongly arguing on our channel that a special dispensation is needed for sectors like NBFC. Today, the Indian Express argues that perhaps some special dispensation is needed even for the real estate space. So there is still a lot of clamor, although there are debt market experts who tell us that the debt market has maybe overcome the scare. To discuss this as well as specific issues pertaining to the company, Sanjay Gupta, Managing Director of PNB Housing Finance, joins us now. Good morning, Mr. Gupta. Thank you very much. Before we come to your own, revenues and EBITDA and margins, I just wanted to ask you, as an observer of the space, do you think now housing finance and NBFCs are able to find enough takers for their debt?
Well, good morning, Latha. Yes, good credit growth is very much visible, and there's an inherent demand, and I think sticking to one's fundamentals of acquisition, underwriting and delivery with dignity will hold people in good stead. So I don't think that the demand is slowing down at all.
No, I didn't mean demand of housing loans. I'm speaking more in terms of sources of money, liability side.
Well, okay, so they are pretty diverse. We are a deposit-taking housing finance company, and we have seen a huge sort of upside on our retail deposits. We do about 10,000 deposit applications a month. The ECB route has helped us. The bank lines have helped us. The core CPs have also rolled over pretty, I would say, nicely for us. And liquidity, as for the company, is not an issue. But for the industry, I would say liquidity is still a concern. And people should be aware that if wholesale liquidity is not there, then banks alone would not be able to supplement the total debt requirement of NBFCs and housing finance companies. So we have to look at wholesale debt capital market also, the corporate bond market.
So, sir, just a follow-up question on that. What we do understand that while in November rollovers have been happening, of course, the rates at which you're getting money, those rates have been climbing anywhere between 50 basis points to 100 basis points. Your spreads have also been gradually coming under a little bit of stress. What should we expect as we look at the second half of the year in terms of margins you'll do?
Well, I would say until H1 or Q2, the spreads were very healthy. We made a 222 bips, which is always our guidance between 215 and 220, and we made a positive of that. Going forward, I do recognize the fact that the cost of borrowing for a lending institution are rising much sharper than what we can pass on to our customers, and hence there can be a slight dip, because we should also realize the H2 interest incomes generally don't get reflected in the same financial year. There's always a lag effect. And so I don't think that the H2 is much under threat as far as spreads go. Yeah, this is an annuity business. Let's not look at it from quarter-on-quarter basis, but on an annualized basis. I'm very sure that FY19 is going to be healthy, and there might be a little bit of compression of 10-15 bips, but not beyond that.
What is the percentage of your non-retail home loan?
Well, that's about, it varies from 18 to 20% quarter on quarter.
Okay.
Annualized, let's take on an average about 20%.
Okay. Is there any worry about that book? I mean, I'm sorry, but somebody told us that your non-home loan forms 30%. Not so. You're saying it's only 20%.
No. Okay, so I would go on air and use your channel to clarify on that. On our total portfolio, 60% is pure home loans to individuals. There is about 16% which is for loan against property to individuals. There's about 4% which is for non-residential premises to professional self-employed individuals, and 20% is wholesale, out of which only 12% is construction finance for residential properties, and from the remaining 8, half is lease rental discounting and the other 4% is corporate term loans.
Okay.
That is the distribution of our wholesale book.
Okay.
And I am happy to state that our wholesale book, even today, is a 0 NPA book.
Okay, that's an important statement, sir, that you are making. I take that on board. You're saying out of that 20% wholesale book, 12% is construction finance and it's 0 NPA, so that's very good news. But I want to just broaden this out, sir, because this is a debate that's ongoing.
Yeah, the entire 20%.
The entire 20% is NPA. Take that point, sir. But the concern right now and the whispers and the talk constantly is there a problem beginning to build up with builder financing? I mean, are we looking at perhaps some casualties in that side of the market down the road? What are you picking up?
Okay. Well, I will address that. Now, you know, with the advent of RERA, what has happened that the projects that we fund have been insulated from the cash flow disturbances of the other projects. I can go on record to say that the projects that we have funded for our construction finance book, they are performing on utilization, on sales velocity, on collection efficiencies as per the projections. Yes, out of the 215 odd accounts of projects that we have funded, 4 or 5 of them have a stress because of sales velocity, but the utilization is there. That means the buildings are coming or the projects are getting developed on time as per projections, and we think, you know, that in H2 a little bit of sales momentum is also going to pick up, and they will be also back into green.
Okay.
Only 4 or 5 accounts are amber when we do a RAG analysis.
All right. Then a final question on numbers. Your second quarter was a pretty picture.
Yeah.
43% loan growth, net interest income up 26%, net profit up 33%, and net NPA just 0.35%. Will you largely maintain this trend?
Right. Well, I just need blessings, you know, and the Indian diaspora is there, the Indian society is there. This is a generic product, it's a toothpaste product, and I think we can replicate it for many quarters to come in the future.
Oh, that's good to hear, sir. Thank you very much indeed for joining us. It's also reassuring to hear that there is a very small piece to builder financing and there are no NPAs in that space.